Alright, what is up boys and girls, welcome back to another video. As always, thank you very much for joining me on liquidity, supply and demand. Back with another video today on the V-shaped recovery, a strategy that has been made famous by Dodgy, absolutely incredible trader. Definitely make sure to go check him out. I've learned a lot off of him over the past, I would say, 5 or 6 months at this point. Been making some absolutely insane gains in the market. 80% win rate over the past 6 months has absolutely changed the game for me in terms of trading. And it's a really, really simple strategy that pretty much anyone could learn, I would say, in a few days. And then it just takes a bit of mastering over time, context, etc. But overall, I do think it's a really, really good strategy that's been doing really well for me and so many other people. So I did want to make a video on it because I do think that this is absolutely incredible way of trading. And it's super simple to do. I can actually see one already on my screen here for gold that happened pretty much as we opened up last night for the next week. So I'll go through basically what the strategy is, and then I'll show you some examples on the charts so you can see basically what's going on. But essentially what you're looking for is, you've got your market, haven't you? You're going like this. Very, very simple stuff really. You're just looking for a nice liquidity sweep of the downside liquidity. So for example, this is your low of this local area that you're trading in. We've got our low, and then you're basically looking for your market to just go like this and then come down, sweep liquidity, and then get that nice V shape back to the upside in the space of 3 or 4, 5, 6 candles. And then you've got your inverted fair value gap that you're looking for, a gap in the market that you're looking for to trade back to the upside. And this is your entry model, very, very simple. You come down, you sweep liquidity, you're looking for a fair value gap to bounce into this to the left. And then if you invert a fair value gap in this area here, then you're basically looking to get long in the market. Manual stop loss if we close back below the inverted fair value gap. Target a 1-for-1 for your first 1R, and then go break even. And then you're looking for internal liquidity targets for your take profits like this. Very, very simple strategy that seems to work a lot of the time for me. 80% win rate, as I said, and a few break-even trades in there as well. So really the win rate probably is higher than you think if you count the break-evens as losses. Absolutely incredible way of trading, as you can see. Very, very simple as well. And we've got a perfect example of this from last night. Basically, an absolutely incredible trade you could have taken in this area here. I think I probably would have taken this one potentially. Like this. You can see on the 5-minute here, we have got a trade that would have worked out. You've basically got your, let's take a look here. So we've got all of our chop. Obviously we open up last night. Nice move to the downside. Really, really clean move to the downside, as you can see. Very, very big momentum to the downside. Lovely liquidity sweep to the left. There's your, obviously your area of liquidity getting swept. We're coming back to the upside. I did check this on the 1-minute time frame, but you can see no fair value gaps. Just a lot of wicks. So I was waiting, okay, if you were going to take this, you'd wait for the 5-minute. Wait to see if this one here got inversed. You can see we didn't quite inverse it on that candle. The next candle we did though. So I would be looking to enter in this area here, targeting a 1-for-1. As my first take profit. I don't know why this always happens when I click onto this. You can see it makes the box white, so I literally can't see. So there's my entry, my 1-for-1. I'll wind it on a bit. We hit the 1-for-1, absolutely perfect trade. Basically took about 15 minutes for this to play out. The 1-for-1, so you would have taken profit there. And then afterwards, I always set my stop loss to break even. So I would have got stopped out at break even on the rest of this position, but still a good trade. And if you're thinking about being a bit more risky, you could just leave the second half of your position until it either hits take profit or closes below and hits the stop loss. If you'd have done that and been a bit more risky, you obviously would have hit your second take profit here for 2R. Really, really good trade. Really, really interesting price action. Very, very simple stuff. These happen all the time, by the way. This is just on gold, but I trade gold in US 100 with this strategy, and it's been pretty ridiculous, to be honest. You can see here, there are lots and lots of times where the market comes down. I mean, I can see just like 4 or 5 examples here. The market comes down, sweeps liquidity, and then bounces back to the upside. It happens all the time on gold recently. And US 100 is really good for it as well. You can see there's loads of examples here of the market coming down, sweeping clean, obvious areas of liquidity, all the way down here to almost this one. Lots of areas of liquidity getting swept. Really obvious fair value gaps. There's one here. This would have been a great trade. You obviously have your 1R target, and then you set the rest to break even. This would have hit the take profit in the space of 15 minutes. Then you would have had your take profits I probably would have had one here, and then I'd probably just leave a runner, to be honest, since we were in a bullish uptrend. You can see that this would have come up for 2.5 R. After you take half position off here, half off here, and then just leave a runner, you could have gone for a 1 to 6, 1 to 7 on this trade. Absolutely incredible trading strategy, and there's tons of these in the market all the time. Is there one here that we could have done? There's quite a little bit of a smaller one that you could have potentially taken here. You can see we've had all this build up liquidity for a while. Very, very obvious sweep to the downside of all of this. We come down. We've got a nice little fair value gap here that you could have taken. Obviously close back above. Targeting a 1 for 1. This was quite a small one, so some people don't like to take the small ones, but it depends. All depends on the context, obviously. We've got the 1 for 1 here. And then as you can see, this pretty much blasted up to take profit on all of this in the space of about 15 minutes, which is absolutely insane. Really, really amazing strategy. This works on US 100 as well, as we can see here. We actually had one of these, a perfect example of this on Friday before close for the PM session. You can see massive build up of liquidity here. Came down, got swept, came all the way down, swept loads of liquidity out. You can see we're starting to form that beautiful V shape. Once you start going down below this level, you're thinking, okay, now we're starting to get a really, really nice area that we could potentially bounce from. Thinking, oh, we're coming down, we're making some gaps, which is good to see. We've got a really nice fair value gap here. And then you can see the momentum back to the upside, the beautiful close above. As you can see here, stop loss 1 to 1. TP is obviously just 1 to 1 for the first take profit. Let's wind this on a bit. There you go. In the space of 2 candles, 10 minutes, you pretty much come up, hit your 1 for 1 take profit, set the rest of it to break even, as you would have done here, as you can see. And then my target's just back to the upside. I would have targeted probably this internal swing high. And then I probably just left the runner up to the highs in case we fully V-shape back out of all of this, which would have been my standard practice. As you can see, we came up and hit the second one, the second TP. To be honest, because we were going into the weekend and I didn't want to get gapped on any of my accounts by the market, I probably would have just closed both of these. As I saw us starting to consolidate and not making any more moves back up to the upside before the close on Friday. But you can see that this would have played out if you'd have held it over the weekend, if you're trading in terms of swing accounts. But I don't like to hold over the weekend generally, just because the gaps in the market can be insane, especially recently with what's been going on with all of Trump's tweets, etc. But you can see the potential of this strategy. Absolutely insane trading strategy. Really, really high win rate. Really, really easy to do. And you can see the efficacy of how many times this works. There's been tons of these recently. Obviously, we've been a bit bullish last week over Wednesday and Thursday, so it was a bit harder to trade in terms of getting these. But pretty much every time you see a really, really nice dip in the market, you can be looking for these V-shapes back to the upside. Like and subscribe and leave a comment. Sign up below if you want to get signals for this, and I'll catch you in the next one.